Hey, what's up, everybody? Welcome to the channel. Today, we are going to be going over the ICT Silver Bullet trading strategy. ICT has been nice enough to give us one of his trading strategies, which is the Silver Bullet. And this is fairly new, it came out this year. And so everyone's interested in learning it. I've been trading it for quite a few months now, and the win rate has been amazing. And I want to share with you guys exactly what it is and how it works. And if you're looking to pass your funded challenges and make some money, this is exactly what you should be looking for. So let's get into it. So we are trading essentially this works on any USD pair if you're looking to do Forex. But I personally trade this on the indices. So we're going to be looking at the NASDAQ 100 and the S&P 500. This is all going to be on the New York time zone. So make sure your charts are set to UTC4. And essentially, we are looking to enter trades on the 1 minute or the 5 minute. So let's dive right into it. There's only a few steps to look for here. Step one, you're going to wait for liquidity to be swept, or you can take a trade off a continuation after the liquidity was taken out. And what do I mean by that? Well, essentially, we're going to use buy side liquidity as an example. You have this previous swing high here, and then you have another swing high that takes out the previous swing high and then kind of melts, right? So that's your buy side liquidity being swept or taken out. Now, essentially, when that happens, you're going to look for a displacement candle, and that's essentially going to create a fair value gap and a market structure shift. So that displacement is going to take out that previous low, and then it's going to create a fair value gap between three candles. And number three, you're going to wait for price to come back up, enter into the fair value gap, essentially correcting the price imbalance between candles, right? And then step number four, you're going to enter your trade once price comes back into that fair value gap, and you're going to have your take profit set to 5 or 10 points, and your stop loss set to 5 points. Now, another option you can do is set your stop loss to above the previous high, and your take profit, you can look for sell side, which would be this previous swing low down here. Now that's an example if you're shorting and it's the same way, go in the opposite direction, sell side liquidity being taken out, and you're looking for longs. So a perfect example here, if you take a look at the markup I have here, we're going to use the actual chart here and show you an example, right? So you have this swing high creating buy side liquidity, and price failed to take out the buy side liquidity. And then finally, right up here, buy side liquidity was taken out. And what did it do? Well, it created all of these displacement candles. Now, right here, this swing low, that is your market structure shifts, right? So you have buy side liquidity being taken out, you have your market structure shifts, and you have this one fair value gap, two fair value gaps, and then three fair value gap. Well, price respected the very first one, and then so you could have looked, as you're watching price, you're going to see it respected this first fair value gap, and then you're going to look to short within that fair value gap, and then you take it down. That's a perfect example right there of how this silver bullet strategy works. It's easy as 1, 2, 3. This happens Monday through Friday, every single day, and we trade essentially the AM session, which is between I'm Pacific Standard Time, so that's between 7 and 8 a.m. For New York time, that is going to be between 10 and 11 a.m. But I want to go over a few different trades that I took and show you an exact example of how this plays out, right? So last night I was on the Nas and I was looking at the 5 minute, and I actually swung this trade overnight, which is not something that I ever do. But I was pretty confident in this and been trading this silver bullet for a while now. So I was like, you know what? I'm gonna try this out here. So what I did was, let's take that out of the way here. We had this 5 minute fair value gap down here, right here, and it was being respected quite a few times. So as it started pulling back up, I decided to get in, and I took a long position and I held it overnight. And what was I targeting here? Well, I was looking at the 15 minute, and we have all of these fair value gaps up here. We even have a price imbalance between these two candles. So I was like, you know what? Price may come fill up some of these imbalances up here. But when I woke up, I saw about $500 and it was about 90 points. So I decided to take that and called this one a win. So that was trade number one. Trade number two was on the S&P 500, and that was on, let's see here. That was right here. Let's see. So this was right after 10 o'clock. Outside the window, but I'm comfortable enough to, do this outside of that silver bullet window of that 10 to 11 a.m. here. Well, so we have these displacement candles up going up. We have a market structure shift here. But I saw this fair value gap. I got in right off the rip here, and I took this up 5 points. So that was trade number two. And trade number three was back on the NASDAQ. And let's see where we at here. It wasn't that one. This one was just the example. So I'll delete that one. I took a buy here. So goes to show that you can take it both ways. You can use this strategy both ways. And this is such a bearish afternoon, but we were able to take buys, right? So you could have shorted it from up here in that example, but essentially what I did was I took a long position here, and same thing, fair value gap, displacement candle, fair value gap, and was very much respected. And so what I was doing was I was essentially targeting the price to be filled in this fair value gap right here, right? So I was like, all right, I'm gonna take this trade here, and I got in, and I took it about 20 points, and it respected this fair value gap quite a few times, and then decided to continue down. So those were my three trades today, and here's exactly what I did for proof. July 21st, 2023, $534.48. Took three trades, and that was on the S&P 500 and the NAS futures charts here. So this happens, like I said, every day, Monday through Friday. It's a great strategy to pass your accounts. If you don't want to do support and resistance and you're looking for that trading strategy, that's just pretty fun to trade and to just have fun with. And it's pretty simple once you get the hang of it. Now, if you want, we do have a Discord. If you want, you can click the link in the bio. You're going to come across this landing page. We do live tradings in the morning for the New York session between 10 and 11 a.m. New York time. We'll do live tradings, questions and answers. Basically, if you don't want to do this alone and you want to have a group setting to do this with, feel free to click the link. It's $49, which gives you lifetime access. But other than that, I hope you guys took something from this video, and I will continue to post more breakdowns, more trades. I will be recording my trades live and sort of posting those as well. So thanks for watching, and if you can, please like and subscribe, and I'll see you guys on the next one. Thank you.